As you know, stocks are a small share in a large company, but there are other ways to buy into companies. You could start your own company. In that case, you'd own the whole thing. You could join with partners in starting or buying a company, in which case stock or ownership would be distributed among the partners. You can also invest in startup companies. This is what venture capital firms do. They invest in high-risk startup ventures.
A professional investor would invest in us because as they look at the broad market, they look for key trends that are happening in terms of how our society is being transformed by technology or by the way business is evolving, and they try to bet on those companies that they think are defining the trend or moving the trend forward. Some are going to succeed and some are going to fail. And when you add it all up, the one or two of the companies are going to be huge successes, and then some are going to be in the middle, they're going to be okay, and then some are going to fail. And they add it all up, and at the end, they have a nice return.
Venture capitalists are not looking for a guaranteed return over a period of time. They're looking for the big win. They're hoping that by investing $10 million in a company like Robotics, they'll be able to sell their stake for $100 million in a couple of years' time.
If you were just a person who worked really hard and have a pension and have a little bit of money that you want to invest, I would be very uncomfortable taking money from someone who is investing, hoping to make a significant return so that they can augment their retirement. Because that's not the nature of venture investing. That's not the nature of investing in startups.
Venture capital is high risk. Most startups fail. Therefore, it is unlikely that teachers like yourselves will be investing in venture capital. However, you might be willing to invest some of your savings in a new company started by someone in your family or a close friend. In the case of Robotics, the first investor was Ian's father.
That's how we were able to start the company, off that couple $1,000s.
It might be risky, but if the entrepreneur is someone you know and trust, then maybe the high risk is worthwhile. Just keep in mind that entrepreneurs are risk takers. 44% of all new businesses fail within the first 3 years.